Today we're going to talk about retirement accounts for small business owners. I thought that this was a relevant topic because many military members and veterans are starting businesses these days. I saw a statistic that was something like 8-9% or something of veterans end up being small business owners of some sort, which is way higher than the average populace. So I thought it was definitely relevant to touch on the different retirement accounts that are out there and, the pros and cons of them and why they might be applicable to you. So when we think about retirement, it's talked about in every job. It's like the first thing that comes up. There's like a TSP, right, in the military or in the civilian world, it's a 401k. And every business is expected to provide that. When you're a business owner, you don't have that unless you go set that up yourself. So setting up a retirement account can do a few things for you. Can save on tax in future years or present year, depending on what type of contribution and what type of account you're setting up. It can create a tax-deferred retirement account that grows tax-free, right? That's why we like the TSP, the 401k, the Roth IRA, all these things so much. We can do that in our business. We can also diversify away from our business. As your business grows, you may become more concentrated with your net worth trapped inside of this business. So implementing some sort of retirement account allows you to diversify away from that highly concentrated asset. Typically, a lot of business owners aren't setting these up properly or aren't choosing the right ones because it just takes a little bit of work to do. It isn't super intuitive. It's not done automatically, kind of like when you sign up for a job. There definitely needs to be some action and a little bit of education on the business owner's part to make sure they're implementing the right account for them. So let's get into it. There's 4 main types of accounts I'm going to cover today. The SEP IRA, the solo 401k, the normal 401k that many of us are familiar with, and then a cash balance pension plan. So the SEP IRA, this is going to be the simplest account that any business owner could set up. Anybody that has 1099 income, that's contract income. This is kind of like the freelancer's retirement account, if you will. So this is best for those who are a business that has like all owners or a few employees. It is really, really simple and easy to set up. It's like one form, and then we can set that thing up at most brokerage, most institutions support a SEP IRA. It only allows for employer contributions. So these can only come from the business, the employee. If we have multiple, let's say we have a partnership, we have multiple employees, maybe an owner of a shop with 4 employees that work there. If we're doing a SEP IRA, these can't come from employee contributions. They can only come from the employer. It is going to have lower contribution limits than the solo 401k. In 2024, contributions are going to be limited to generally 20% of net income on your Schedule C up to a contribution limit of $69,000. This ends up being lower than the next option that we'll talk about, which is a solo 401k. For a lot of businesses that are in that range from, $100,000, $200,000, you're able to contribute typically more to a solo 401k, and we'll get to why. It is typically best for those that have a side hustle income when they have a 401k at work. It's not going to affect your 401k contributions at work. We can stash away a good portion of that side hustle income into that SEP IRA. It does only allow for traditional contributions, which are pre-tax. So that's something to think about for sure, depending on what your tax bracket is and what it might be in the future. Okay, so to summarize the pros of a SEP IRA, it's easy, it's simple. It's going to have a contribution limit of $69,000, which is relatively high. Cons, that's going to be a lower contribution limit for most when compared to the solo 401k. If we're talking about a sole proprietor or a solo business, it's only going to allow for traditional contributions, which also could be a con depending on your tax situation. So the next account is going to be a solo 401k. So this is only for those sole proprietors, those solo businesses where maybe just the business owner and the spouse work in the business. If you have any employees outside of that, you can't do a solo 401k. It is going to allow typically for the highest contribution limit, and especially if your spouse works there too and your income can support it, you can actually double up that contribution. So that contribution limit is $69,000 in 2024. We can double that up with a spouse so that our total effective contribution is $138,000 across 2 spouses, which is pretty awesome. The reason why it's typically higher than that SEP IRA, that allowed contribution, is we can do both employee and employer contributions. So the employee contribution, think about that like you would at a 401k or a TSP, coming out of your paycheck, the employee just giving away part of their salary, their paycheck, to the solo 401k or the retirement account. You can do that up to the $23,000 limit in 2024, which is the same as a 401k. The employer contribution then can make up the rest all the way up to $69,000, and that is 25% of your W-2 earnings for an S corp, or 20% of net earnings from self-employment for somebody who's Schedule C, which is just a sole proprietor. That gets a little complicated, but between employee and employer contributions, we can get to that 69,000 number if income supports it. And if we can put the spouse in the business or on the payroll, we can double that number, which is pretty unique, and is why for that high income solo business, that solo 401k usually ends up making the most sense. It is a little bit more burdensome to set up and report on. Once the balance gets higher than 250,000, there's some additional reporting requirements. It's going to be best, as I said, for those high income solopreneurs. To sum it up, the pros: high contribution limits, relatively simple to set up, can do Roth contributions. I didn't add that one as well. So that's a key for that. Those employee contributions, we can put those in the Roth bucket to make sure that grows tax-free forever, and it's tax-free when we take it out. The cons: it's going to be a little bit harder to set up than that SEP IRA. And then, another con, if we're not a solo business, we can't implement this. So if we're implementing a solo 401k and we're thinking about hiring, that would be a consideration for sure. So the next one is going to be just a traditional 401k. Normal 401k, this is going to be for maybe a little bit of a bigger business that has multiple levels of employees. Maybe we've got some officers, executive officers, and we've got maybe some employees that are lower on the wage scale. These are going to be much more complex. They're going to have discrimination testing, but we are able to offer a matching benefit to our employees, right? We can think about like most companies do a 4 or 5% match. We can do something like that. That definitely improves employee satisfaction, improves retention potentially. Kind of the cons of this plan is we can't discriminate towards the owners. We're going to have that max contribution limit of $23,000 in 2024 for those under 50. So it's not really the best plan for those that are trying to maximize the contribution for the owner. But for bigger businesses that don't really have an option, this 401k, just setting up a normal 401k, can be a good way to definitely help themselves save for retirement, diversify away from the business, as well as improve employee satisfaction and retention. We do want to be careful and be sure that the business can support the level of contribution that you're going to promise. So that 4 or 5% match, we do have to run some projections and make sure that the business can support that. Okay, so lastly, we're going to talk about the cash balance pension plan very quickly. It's much more complicated than the previous three. This is only going to be for those super high income businesses. Allows for much larger contribution limits. That's kind of the big kicker and why this becomes advantageous to those high income business owners. You can stack that cash balance pension plan on top of a 401k, or on top of even a solo 401k, to allow contribution limits depending on your age, sometimes even over $300,000 in a year. It's going to be much more burdensome, much more costly to maintain. The investments in the plan, hence the name cash balance pension plan, investments are typically more conservative. It's going to defer quite a bit of income. If you're younger in your career, you might not want to lock up quite that much money. You might have goals and dreams to use that money before retirement. Also, be able to grow those assets in accounts outside of a cash balance pension plan. So there's tons of considerations to go there. It's typically going to be for those that are higher income, maybe a little bit older, and want to put away much more than what a solo 401k or SEP IRA might offer. So in conclusion, there's lots of options when we are business owners. We, want to set something up for our business. We didn't even touch on the traditional IRA, the backdoor Roth IRA, normal Roth IRAs. All of that is still in play. Many of these plans when they're at different employers, we can actually stack them on top of a workplace 401k plan as well. So if we've got side hustle income, that doesn't affect any plan we set up there. It doesn't affect what we can do at our W-2 job at work. So whether it's military or civilian job, those two are separate buckets. But the bottom line is there's lots of options that we can set up. We want to make sure it's the right plan for you both now and kind of in that near future. Like, where is the business going? For a high income solopreneur, that's awesome. But if we're looking to hire next year, we might not be thinking about a solo 401k plan. If we're thinking you're going to maintain that solo lifestyle, solo plan, or just hire your spouse, solo plan might be the best for you. So got to weigh the pros and cons of each of them, kind of what your goals are. If your goals are to reward your employees and build a bigger company, that normal 401k plan might make the most sense to implement. If your goal is to stay small and lean, it's typically going to be that SEP IRA solo 401k. If you're very, very high income, maybe you're mid-career or older, and you want to put away much more than the contribution limits allow, that's where that cash balance pension plan might come in.